Today I wanted to do a follow-up video on my last reverse mortgage video because even though that video was extremely thorough, there's a few more points I want to explore, and I want to start off with giving you some few additional things you need to watch out for when getting a reverse mortgage. And also later in the video, I'm going to share some viewer comments and viewer stories about people who have actually gotten one. Some people have had great experiences with them, some people not so great. And I'm going to try to shed some of the good and the bad in this video. So it's not all going to be bad news and just, reverse mortgages are horrible and you should never get one, even though that's kind of like my own personal opinion on it after everything I've learned about it. It has helped people in certain situations, and I like to be as unbiased as possible and just give people the facts. But let's start off with 3 additional red flags that you need to look out for if you're somebody who is looking at maybe getting a reverse mortgage. The first thing is high pressure sales tactics and rushed timelines. Okay, I kind of covered this in the first one, but we need to go over this again because one of the biggest red flags in any reverse mortgage discussion is a lender or a loan officer who pressures you to move quickly or discourages you from taking time to think things over. Obviously, they want to close the deal so they can get paid, just like any other type of salesman. But legitimate reverse mortgage professionals understand that this is a major decision and is going to impact any inheritance that you have planned for any of your loved ones and any other financial decision moving forward. So if anybody tries to pressure you and says something like, this rate won't be available next week, or you need to decide today to lock in these terms, walk away, guys. As enticing as the deal might sound, there's probably a lot that you're overlooking if they need to pressure you into signing that quickly. And by the way, today I'm in Strawberry, California, walking down Century Lane and Great Circle Drive. Now, of course, interest rates for any type of loan do fluctuate and you can't lock them in forever, but a legitimate lender will give you time to think things over, review the documents, and consult with any of your loved ones or attorneys or financial advisor, whoever else you need to speak to. And that's why you really need to avoid anybody who's telling you you need to sign up today, discourages you from getting a second opinion or seeing what anybody else has to say about it, because that is probably a sign that the terms are not as great as they could be, and this person is desperate for a deal. And another red flag that you have to watch out for, you need to look out for excessive contact, meaning that if they're calling you multiple times a day, showing up at your house unannounced, or continuing to contact you after you've asked them for time to consider your options, these are clear warning signs of aggressive sales tactics, and obviously they are prioritizing their commission over your financial well-being, and this is what you want to avoid. The second red flag is unclear or hidden fees and closing costs, okay? Reverse mortgages come with various fees, including origination fees, mortgage insurance premiums, and appraisal costs and closing costs. I covered all those costs extensively in the first video, so if you missed that, I'll have it linked down below so you can go back and watch that one. And a reputable lender is going to be transparent about all these expenses up front and provide you clear documentation of what you're going to pay and when. But the red flags can be things like vague explanation of fees, a reluctance to provide written estimates, or discovering that there are additional costs late in the process that weren't previously disclosed. Big red flags, guys. And some lenders might even try to sell you expensive insurance policies or investment products as part of the reverse mortgage package. All that kind of extra fluff is nonsense and it helps them make extra money. Walk away from deals like that. And as you start to look at the deal, you need to pay attention to the total annual loan costs, which factors in all of the fees and projected interest over the life of the loan. And if a lender can't clearly explain this rate or seems to downplay its importance, consider working with someone else. You should be very suspicious if the loan officer is suggesting ways to get around the Department of Housing and Urban Development's financial assessment requirements, or they're trying to encourage you to inflate your income or expenses in order to get approved for the loan. And the third big red flag is kind of related to this, which is not requiring the completion of HUD-approved counseling, because federal law requires reverse mortgage borrowers to complete counseling with a HUD-approved housing counselor before getting the loan, which is a good thing. The idea behind that is they're really trying to make sure you understand what you're getting yourself into, because it is serious and it can be a big negative if you don't understand what you're doing. So any lender who suggests that you should skip this step and offers to arrange counseling with someone who isn't HUD approved or pressures you into a specific counselor that they recommend, you need to walk away from the deal. Legitimate lenders will always encourage you to complete counseling with your counselor of choice, and they will never coach you on what to say. They're also going to respect the counselor's recommendation if they determine a reverse mortgage isn't the right situation for you. Now, here's a warning from one of my viewers who actually got a reverse mortgage themselves. He says this. He says, look out for unnecessary upgrades. It says something like that is not discussed in the counseling, or at least it wasn't discussed in our session. And they assume that the appraisal would be for the value of the home. So any repairs needed that would reduce the value of the home, of course, they are going to want you to do that. I was just smart enough to ask some questions, finding out the appraisal is not your typical appraisal that would focus on the value of your home, but would also be to have upgrades, improvements, and that have nothing to do with the home value, but for any other improvement they would want on your property. Seems to me that they want to add value to your property that is not needed for them to have that extra equity when you pass away from the sale of your home. He also says, don't forget that even though it's not counted as income, any money you have left over at the end of the month can be counted as assets towards however much cash you are allowed to have from the reverse mortgage. And he says, if we end up getting it, it would only be because we need to use the equity for things needed that we don't have the cash for, which is typical. And that's why most people get the reverse mortgage. And it's also why I concluded at the end of my last reverse mortgage video that the people who usually get reverse mortgages are the ones who probably should not be getting them. Unfortunately, that's the way the system is designed. The people who need them the most are the ones who probably shouldn't be getting them, because they're the ones who have the most to lose by getting them, versus using it as a financial tool in retirement in order to save money on taxes. That's a whole nother level of financial savviness and only works if you actually don't need the money. Let's look at some more viewer comments here. I worked in banking about 26 years. While my positions were mostly management, I worked on lending, including home equity, unsecured loans, and mortgages. The reverse mortgages were something that banks didn't carry. When I researched them, I discovered that there was as many risks that your average borrower wouldn't understand. In my opinion, unless you have no other option, stay away from this product. When something sounds too good to be true, it usually is. And I pretty much agree with that. This person says, my parents did a reverse mortgage on their 3,600 square foot home. When they needed to go into assisted living, the amount owed to the reverse mortgage company was more than the market value of the house. So we ended up just giving the house to the mortgage company. It was tragic. And that's another perfect example in the real world right there of how the people who need it the most are the ones who probably shouldn't be getting it. But it seems like if they didn't get it, then they probably wouldn't have been able to afford to move into the reverse mortgage facility, I was going to say. They wouldn't be able to afford to move into the assisted living community without the reverse mortgage. So some people really are between a rock and a hard spot, and they're making some very tough financial choices with these loans. This person says, although I do not personally think a reverse mortgage is a good idea, better to downsize or rent an apartment and use the equity that you built up to improve your quality of life instead of being strapped for cash clinging to a house. But I am so sick of children and grandchildren expecting an inheritance. Well, that's kind of, one reason to get the reverse mortgage is if you don't really plan on, passing that property down to any of your heirs, or you don't have any heirs, and you just want to take the money now. But like I said, there's a lot of caveats to getting the reverse mortgage that can cause you to lose your home if you don't comply with all of the stipulations in that contract. So even though it's a good way to extract money from your home, it can actually end up making you lose your home if you don't know what you're doing. And once again, if you don't know what I'm talking about, go back and watch my first reverse mortgage video linked right in the description below. Now let's talk for a little while about why reverse mortgages are good. One of my viewers who's been watching me for a long time reached out to me because he is a reverse mortgage lender and he wanted to point out a few things that I missed in the original video. And I wanted to shed some light on that, especially since he has more experience in this department than I do. He told me that I actually did a very good job explaining the tax strategies and the tax planning scenarios that you can use a reverse mortgage for. But there's a few things that he wanted to correct me on from my original video. The first one is this. The risk of foreclosure for non-payment of property taxes, homeowners insurance, or HOA fees is not unique to a reverse mortgage. Any homeowner with a traditional conforming or FHA loan would also face foreclosure in this scenario. Would this make traditional mortgages a scam as well? Question mark. Also, you've covered on your channel that sadly those without a mortgage at all face a tax lien and foreclosure for non-payment of property taxes, which is something we agree on is borderline criminal. It's definitely criminal. Nobody should be forced out of their home for not being able to pay property taxes, especially if your home is paid off and you are a senior citizen. Now that's a fair point. I'll give him that one. In that regard, reverse mortgages are no different than any other type of loan on your property. If you fail to make those payments, you can lose the house. Another thing I mentioned before was that reverse mortgages can impact Social Security or Medicare, but he says actually reverse mortgages can endanger the benefits of needs-based program recipients who are receiving Medicaid or SSI assistance. However, entitlement program benefits from Social Security or Medicare are not impacted. So that's more of like a clarification there from my original video. He also wanted to point out that just like any other salesman, you have reverse mortgage salesmen, and you see just as much unscrupulous behavior in other sales departments as well. Like whenever somebody's trying to hard pressure you to buy a car, whenever a real estate agent's trying to hard pressure you to put an offer on a house, or even when just a regular loan officer is putting the pressure on you to close on a house that you're looking to buy, you can see just as shady of tactics done from other salespeople in different industries, which is also true. It's not like this problem is unique to reverse mortgage salesmen, but I had to point it out in the original video, of course, to make sure that people are aware of what's going on. And even we spent a bunch of time in this video pointing out some of the red flags you should be looking out for. Another thing that he pointed out to me was that the rescission period, which conforming FHA and reverse mortgages have each a 3 business day right of rescission period. Reverse mortgages aren't any more scammy than their counterparts, as they all have to abide by the same Truth in Lending Act requirements, which is also true. I am not disputing any of the things that he's telling me here, which are more just kind of like clarifications and understanding that you can fall into a lot of the same traps with just buying a regular home versus doing a reverse mortgage. And I totally agree. And it's another thing that's just gotten a bad rap, right? Because you have some bad actors that have done some very unscrupulous things and unethical things and have hurt a lot of senior citizens from this, well, it gives it a bad name, right? It doesn't mean that the product itself is bad, but you can have bad lenders and you can have bad salespeople that put you in a vulnerable situation where you do ultimately lose your home. And that's the biggest risk. And this was a statement that he made to me. As I see it, a home equity conversion mortgage, which is the correct term for a reverse mortgage, is nothing more than an optional pay FHA insured loan. Yes, it's front loaded with substantial fees, but the homeowner is not required to make principal and interest payments. That benefit comes with a unique cost of entry, which is generally established by the Department of Housing and Urban Development outside of lender margins and origination fees. He also says that a reverse mortgage should never be used as a short-term strategy to meet long-term needs. And fortunately for those who are cash poor and house rich, their mortgage has served as a forced savings account of sorts, which is something that we've talked about many times in previous videos about buying a house versus renting. And the final thing is, the reverse mortgage may be a loan of last resort for many. However, that label has been used broadly and consequently may have inadvertently harmed those who could have potentially benefited from getting the loan, which is also true. It goes back to Some people have given it a bad name and a bad reputation, but the risks are real, guys. That's the other thing you have to understand. Like, even though if you do things right, it can go relatively smoothly if done for the right reasons with the right lender, you're always going to have that hanging over your head, right? You're always going to have these extra requirements that you need to keep up with different things around the property, like the maintenance requirements that come with it, because it's not just keeping up with the property taxes or insurance, it's keeping up with the lawn and keeping up with the paint, keeping up with the roof, and other costly things that require a lot of maintenance around the property that, if not done, you can also be foreclosed on for. But I want to thank Shannon for writing that email to me, and shout out to him for shedding some more truth on the matter. And I also want to share a couple of viewer comments who had a positive experience with a reverse mortgage as well. Here's someone who said, my mom, who owned her home, got a reverse mortgage with help from my older brother. She stayed in her home until she died at age 94. After selling the home, the bank got what was owed to them, but the value of the property had increased. It was a waterfront property, and there was a large amount of money left over after the home was sold, allowing my younger sister to buy a property for herself. It worked out well for my mom. Now, this story is kind of like the luck of the circumstances, right? The reason why the reverse mortgage worked out so well for this person was because her mother just happened to buy the right property at the right time. It was a waterfront property that appreciated substantially from the time she bought it. And if she passed away at 94 in the home, I would assume she probably owned that home for maybe 40 or 50 years. So just look at what home prices were anywhere 40 or 50 years ago. Of course, it's going to work out more in your favor when you have that much equity built up into the home, where even after paying off the reverse mortgage, there's still a good chunk of change left. But understand, that is not the situation for a lot of seniors who end up getting these reverse mortgages, and why people end up having to give away the house, like the other viewer mentioned in their comment, after everything's all said and done, because the amount owed ends up being equal to, if not even more, than the value of the house in the end. And I'm sure that if this person went through that similar experience, they wouldn't be saying that it worked out well for them. This viewer says, a reverse mortgage depends on many things and each situation is different. I have a reverse mortgage for 9 years. I was able to not pay any federal income tax for 6 of those years, since those dollars are a loan and not income. I have no kids and own my house. Best decision I made for myself at 74 years old. So once again, why is this a positive experience for this gentleman? Well, it's because he's using it as a tax saving strategy. He's had the reverse mortgage for 9 years and paid 0 taxes for 6 years. That is huge, guys, because he's using debt, and when you get a loan, you don't get charged taxes on that money. That's not counted as income because it is debt. And that's another perfect example of using it for the right reasons. You know, this person's using it as a tax saving strategy, and it's no wonder that he's happy with the results, because he's using it in a beneficial way. But you got to understand that probably 90% of people who take a reverse mortgage do it because they do need short-term cash, something that Shannon advised against doing. They do it because it's really the only asset they have in retirement. They don't have any retirement savings, so they need it in order to survive in retirement. And this puts people in a very vulnerable position, because since they don't really have any money, that's why they're getting the reverse mortgage. That if anything goes wrong, or say they need a new roof on the house or whatever, and they can't afford to do it, or they can't keep up with the maintenance because they get sick and they're bedridden or whatever, then you could end up losing that house in foreclosure, which ultimately is a huge problem. And not to mention, those large upfront fees are being paid directly out of your retirement funds, essentially. So yes, there are some positives to it, and there are people out there that have had good experiences with it, but keep in mind the ones that we went over and why they were beneficial for them, and put yourself in those shoes and ask yourself, do I fit into this situation, or am I taking the reverse mortgage because I need it and it's the only way that I can get money right now? Because if you're in the latter category, then you should really exercise some caution before making the decision. But ultimately, it's up to you. I just want to put all the information out there so people know what they're getting themselves into. So if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.